This week's video is on Dutch tender offers. I will define what a Dutch tender offer is, talk about two current Dutch tender offers that are they're in the works right now, and then I will give my thoughts on each. Check it out, guys. Hey everyone, welcome back to another edition of my YouTube channel on special situations investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Welcome back. When we talk about Dutch tender offers, we're talking about the offer to purchase shares in a very specific way. So what happens is a company decides that they want to purchase back a certain dollar amount of shares outstanding. A company will buy back the shares at that dollar amount at a certain price range. And so they identify how much they're going to buy in dollars, and then they identify what share prices that they will purchase back at and give a range to interested investors. Well, the investors can then go out there and bid for which price they want to sell them back at. And then what happens with a Dutch tender offer is that once they get to a certain price that will fulfill the needs of that share price requirement, or how many shares they want to buy back, they will then buy all of them at that set price. So we'll talk about a couple of different Dutch tender offers today. I will give you a quick note though. When I invested in AMC Networks, that particular one was part of a Dutch tender offer. And if you want to go back and look at that experience, I will share it in the notes in this video. But anyway, let's take a look at the two Dutch tender offers that are going on right now. So the first one came from SLM, or Sallie Mae Corporation. Sallie Mae Corporation is the largest private originator of education loans in the United States. Sallie Mae announced their Dutch tender offer on the 2nd of February, and it will complete on the 2nd of March. For $1 billion, they offer to purchase between 13 and 10 cents per share and $15 per share of company equity. And that turns out to be approximately between 17 and 20% of the shares outstanding. Management's impression of their share price is that they believe that this particular company is way undervalued. I've seen some estimates out there in Seeking Alpha articles and other locations that estimate that Sallie Mae should be closer to about $30 a share. If the management team for Sallie Mae is right, then this is a great buy at this time. However, I would note caution that there is a lot of different caution around this particular one, because there is some political risk that's also included with it. With the current President Biden coming in to take over in the United States as the President of the United States, we have a lot of things that may affect the share price and the ability of student loans to be out there. One of the things that he talks about specifically is making school free for anyone that earns less than $125,000 a year in their household budget. So that would definitely be a boon to anybody who's trying to get their children to school, but not necessarily very good for Sallie Mae. However, Sallie Mae is a private education lender as opposed to a federal education lender. And you may or may not know this, but Sallie Mae spun off the company that does the federal loans now, and that's Navient. and they did that back in 2014. So because they did that back in 2014, Sallie Mae basically does a lot of the private lending for students. They probably have some economic moat here, and that is partly because they are associated with student loans. Even today, investors may think that Sallie Mae does the federal student loan program, but again, that's Navient that does that. Some cursory, not due diligence price estimates that I'm looking at with this one is I expect this company should be worth at least over $16 a share. The company, when they announced this, it was a pretty quick move, way up and over the tender offer prices, and so there's not a lot of upside in this particular one. I bought in at $14.71, and the current price, as of the last time I looked, was about $15.35 a share. If you're interested, you can definitely go into it. However, just realize I am not an advisor, so I'm just giving this as my own thoughts on my own investments. So good luck with that. If you like that type of video, if you like these types of things in the video where I share my specific entry price, please smash the like button and comment below what your thoughts are with that. It helps out with the YouTube algorithm. It helps me continue to create free production for you. So thanks a bunch, guys. Back to our second tender offer, which is for Seneca Foods. Seneca Foods is a producer of canned and processed fruits and vegetables in the United States. Almost all of their business is domestic in the United States, and if you've walked through a supermarket, you probably have seen their products like Seneca apple juice or applesauce. They announced their Dutch tender offer today, the 8th of February 2021, and the completion date is the 9th of March 2021. So you got about a month to participate if you're interested. They offered to repurchase $75 million of shares, and that is at a price point between $40 and $46 per share. Prior to the announcement, the share price was about $41.50, and it's shot up pretty quickly up into the 46 range almost, and then it's come down just a little bit today in the trading that's going on. Last I saw, it was going at about $45.75 per share. This particular tender offer represents anywhere between 22 and 25% of the shares outstanding, a significant portion of the shares. This one has an interesting thing about it. It does have what's called an odd lot priority. And if you're investing in special situations, you should know that an odd lot priority gives you precedence over certain transactions. And in this particular case, the odd lot that they identified is 99 shares. So 99 shares or below, anybody who tenders their shares during this particular tender offer allows the company to basically buy those shares first, and then they go ahead and buy at a pro rata basis anybody that has more than 100 shares. When I think about this one, I look specifically at the company, and it looks like this one might be an interesting longer-term play, as well as Sallie Mae, but this one in particular because it is family-owned. The family ownership on this particular company and the family control on this particular company has pros and cons. Pros are they're going to be thinking a lot longer term. Cons are you may not be able to really have your voice heard if something goes bad with this. Through this particular case and the ownership of Class B shares, the families that own this particular company or control this particular company have over 50% of the voting rights for the company. This one is interesting because it may have benefited from the recent coronavirus scare. A lot of people may have gone out there and purchased a lot of canned vegetables and fruits. And in that particular case, with Seneca, they may have had a good year because a lot of their inventory was cleared out as a result of the coronavirus scare. As a result, they may not have a very good long-term perspective, at least in the next 6 to 12 months. I'm currently guessing that this particular company, and again, this is a guess, due diligence, do your own work if you're interested in getting into these, but I'm guessing that this particular company should be worth somewhere around $53 a share. And so I purchased in at $45.99. You could definitely do better than me on this if you buy it at the prices that I've seen today. I saw it at $45.75 today. If you're interested in learning more about these, if you have not seen other investment things about tender offers and special situations, please hit the subscribe button and you can see how these particular investments turn out for me. I'll probably have something posted in about 6 weeks on it. And otherwise, thanks for watching, and we'll catch you next time, guys. Thanks a bunch.